It's Mark Yegge here, wealth architect and lifestyle investor. Let's take your life to the next level. Welcome to the Wealth Architect Podcast. Hey, Wealth Architect Podcast listeners. Today I have a treat for you. I have one of my interviews that I actually learned a bunch on. And I love to learn and I love to know what I don't know. And you might be surprised. There is a guy that I'm going to be interviewing today. Fantastic guy, has got some really great insights. And let me tell you about him. He's considered one of the most well-rounded capital gains tax deferral experts and informative speakers in the U.S. He's the founder of Capital Gains Tax Solutions, and he is an expert in this thing called the Deferred Sales Trust. And I'll let him talk to you a bit more about that. He's a really informative guy. Lots of great stories about crypto, lots of great stories about people that made a ton of money in the market, people that are affluent, people that need a wealth architect, people that are architecting their lives. And listen, you don't pay any more to anybody in your life than you pay to the IRS or you pay to the tax person. So the idea is to try to eliminate or avoid it or reduce it. And my next guest has some strategies around that. Please welcome Brett Swarts to the show. Welcome to the Wealth Architect Podcast, Brett.
Mark, so glad to be here. Thanks for having me.
So let's talk a bit about kind of what you do. Like, where'd you come from and how did you kind of morph into this business where you help people save money on taxes? And before you answer the question, let me just set the stage that I hate taxes, right? And I think taxes are, I'm kind of a libertarian. I think taxes are a little bit ridiculous, but okay, there's some cost to running a society. But at the end of the day, most people don't know this, but that's the biggest amount of money they'll ever pay in their entire life is to the tax man. So tell us a bit about how you got started, where you are, how you're going, and how you're helping people do this. So go for it.
Absolutely. I fell in love with cash flow investment real estate and being an entrepreneur at a young age. Watching my mom and dad build investment properties in the Bay Area, kind of Silicon Valley area of California. And this was in the great days of the 80s and the 90s. Things were booming. Less regulation, less red tape, and learn how to work hard and learn how to look at cash flow real estate. And I knew I wanted to be probably a business owner of my own someday or more of an entrepreneur. I didn't know I was going to be in the tax world, right? In fact, I didn't train to be a CPA or didn't train to be a tax attorney. In fact, my background, people ask me, well, why you, Brett? I go, because I'm a normal entrepreneur, real estate, person who stumbled upon something that's really special. And that was in 2006. I was at a company called Marcus & Millichap working and helping people buy and sell multifamily properties, doing 1031 exchanges, and thought, things were great, things are going really good. But then something happened, the 2008 crash hit, and I went from making a little bit, Mark, to like nothing overnight. And this is the part where I always shared this part of the journey because I was scared. I was sitting in my mentor's office. Another deal had fallen apart. And I'm saying, what is going on here? Well, the market at that point was at a tough spot. And I was at a tough spot. My new baby at home with my wife, and we said, hey, we got to figure out a way to keep the lights on. And I said, I love the real estate journey and what I'm learning and the mentors I'm learning from, but we're not making a lot of money. But we've got to consolidate here. So we moved with my brother into a small condo. I started working at Cheesecake Factory nights and weekends. And by day, I'd make cold calls to banks and owners of properties to help them hold on to their properties. Because when I was going through this financial struggle, so were they. Now they had multiple millions of dollars, but they're in the process of losing half, some of them losing everything because they had too much debt, not enough liquidity, and they had been forced, by these 1031 exchanges to overpay for properties. And so we said, there's got to be a better way. And that's when we learned about the Deferred Sales Trust. And that's when I fell in love with capital gains tax deferral as a way to not look at just cash flow, but tax flow. Because it's more important than ever to look at tax flow as our scenario here. Because what? $30 trillion of debt. Right? And a big generation of baby boomers that are transferring over $32 trillion to the millennials, as well as a lot of cryptocurrency millionaires that are looking for ways to escape feeling trapped by these highs and these lows, and not a lot of product or properties to 1031 exchange into. And so that was my journey. I started to learn about this Deferred Sales Trust. I thought it was too good to be true at first. I thought, most people should have known about this, but I actually learned about it at Marcus & Millichap, we have to say we're like the Navy SEALs of investment real estate. My manager brought the gentleman in, so I was open-minded enough, and I traded the joy of being right for what I like to say, trying to the joy of being what's true and what's actually happening. And these deals were happening, and we had to open our eyes to just see that there's another solution besides the 1031 exchange. So fast forward, I started to use the strategy. I started to refer them business. And then they asked me to become a trustee after I retired from the Cheesecake Factory. And my wife and I have 5 kids here in Northern California. She's been able to stay home full time. We were able to move out of my brother's condo and buy our own place. And so that's kind of the journey there. It's kind of humble beginnings, and it's through the fire of the 2008 crash.
And it's a lot of times that fire creates, that steel, that hardened steel, right? And gets you into that next level, which is obviously what we've done. You said some magic words in there that I want to talk about. The first magic words are Cheesecake Factory. We don't need to go into Cheesecake Factory, but they're pretty magic words for a lot of people. I like the Cheesecake Factory. But you also said something about a 1031 tax exchange and how that overpriced people into the market. I was one of those people. We did a 1031 right in 2008, right at the tippy top of the market. I don't think I missed it by a day. It was such at the top of the market. I still have that property. We're still recovering, obviously. It's cash flowing now, and it's back up and a little bit higher than its value then, but it's been a long 13-year slog getting back. And I don't think I'm unusual about some of the damage. You always hear people saying, oh, you never lose money in real estate, but there's lots of ways to lose money in real estate. And a lot of them through what you're doing. So you do things. Most people understand about, putting money in IRAs. They put money in 401ks. You have tax deferral, and you also had transactional tax planning. Can you tell me the difference between those two and why it's important for investors to know about those?
Yeah, well, the first thing is you want to clarify, your goals and what you're trying to do, but also you got to clarify what problem you're trying to solve, which is the tax typically, right? The deferral of the tax, but also what solution actually provides that, right? So 1031 exchanges only work for investment real estate. But there's businesses, there's cryptocurrency, there's primary homes, there's carried interest, there's captive insurance, there's all of these other assets that do not qualify for a 1031 exchange. And then to the Deferred Sales Trust, it works for all of these. And so you want to clarify what problem you have, what you're trying to solve, and how the Deferred Sales Trust can be potentially that solution. And at the end of the day, once you have those 3 things lined up, you realize that it's not just the tax that you're deferring. Sometimes it's the time and the energy. It's the stress. It's the entrepreneur freedom with people. I have clients that are selling businesses. They want to start another business. I had a client who sold a $2.6 million business in Alabama, and he's started a new multifamily ground-up development business, right? All tax deferred using the Deferred Sales Trust. I have clients who sell cryptocurrency, $5 million sale. She bought crypto at 50,000 or Bitcoin, and it went to 50 million. And she exited 5 million into the trust, and then she used that as seed capital to start a tech company, an educational online tech company, kind of like a Khan Academy, to educate people all over the world, right? So really the question is, what are you trying to do, and what strategy is going to give you that flexibility to have the freedom to do what you want with the capital while still remaining tax deferred? And that's where the Deferred Sales Trust is amazing.
I love it. So I don't want to put you on the spot too much, but I want you to at least give us maybe the Deferred Sales Trust in maybe a 2-minute elevator pitch. You might have an analogy that you can use, but so that everybody can understand what it is and why it's important.
Excellent. So the Deferred Sales Trust is simply an installment sale. Okay, you might know it as a seller carryback, where, if Mark were selling a $10 million multifamily property that he's owned for 30 years, it is fully depreciated, and he has no debt, he can become the lender. Okay, he could become the lender for, let's just say, Joe down the street, and Joe can give him $1 million down payment, and Mark could carry back the rest $9 million. And in that scenario, Mark has become the lender. He'll pay the tax on the $1 million, but the other $9 million is in a deferral state, okay, until Joe pays him back. Now, in another scenario, he could also just carry back 100% financing. Now, he'd never do that in a traditional scenario with Joe, because Joe has no skin in the game, but he could. He could say, hey, look, Joe, for the next 10 years, you can have a 0 down payment, just pay me 8% interest on the money, and then do a balloon payment at the end of 10. That's known as IRC 453. It's an installment sale. Your CPA knows it. We know it, Mark. That's not a secret. What's the secret or the strategy here with the Deferred Sales Trust is we're combining that installment sale method with like a trust. It's a business trust. It's a particular business trust, and that's where the magic happens. And this is where we jump in at Capital Gains Tax Solutions. We're like the custodian. We're the trustee. of the trust. And instead of financing that Joe buyer, you're going to finance the trust. And at the close of escrow, the funds are going to go to the trust. Joe's going to take title. He's gone. He's got cash or he's got a loan. Who cares? He's gone. He's got the property. And you, Mark, are in a position of a lender to the trust. And this is why it works. You haven't taken any down payment and you're in an installment sale method, okay? Now, this is where the magic happens. Now we can diversify the investments. We don't have to be tied to like-kind investment real estate. In fact, we can put it into securities. You can put it into hard money lending. You could go start a business venture. You can put it into cryptocurrency. You can also dollar cost average. There's no shotgun weddings of rushing around to get engaged in 45 days and married in 180, right? And take on equal or greater debt. Right, which is what people are really getting in trouble right now because guess what? There's not a lot of value-add properties that are out there. It's hard to find, right? Yeah. So why are you doubling down in what happened before? Not that we think, it's going to happen again, but these are some of the things that you can do with the trust. So hopefully that answers the question, Mark.
It does. So how do you find some of the investors that this is perfect for? Because obviously it's not for everyone, but it does sound like it has a lot of advantages over a lot of the traditional ways of tax deferral. So how do you attract those high net worth partners that might have some assets that they need to unlock without incurring the huge amount of money of the tax man?
Yeah, I'll tell you a story we just closed in San Diego, Chula Vista, a $12.7 million car wash for 4 clients that were looking to exit. And their exit, they're in the development business, so they're not really in the acquisition business except for land and then they build. And so for them, they were just going to pay the tax. Also, the partnership wanted to separate a little bit too. And so in the Blockbuster 1031 exchange, it just doesn't solve the problem. So how we attract, we simply just clarify the problem for them and then clarify where the solution lies, right? And that's where they close on the Deferred Sales Trust. So they found me on YouTube and on a podcast. They found me talking like I'm talking to you now about how we solve these problems, and they decided to use the trust. I met him for the first time 2 days ago in San Diego. Before that, it had only been online and on the Zooms for about a month before it closed. But it was last minute. Stakes were high. Here's the cool thing. 3 out of the 4 used the Deferred Sales Trust, deferred millions of tax. The 4th one just wanted to pay his tax, which is cool. Not all of the partnerships have to move. Each of them can have their own trust. In other words, the whole entity doesn't have to move. So I'd say that's the main way. The cryptocurrency is also really big too. And part of that, we're just clarifying the solutions for people with their freedom and their time and their energy. The other one is estate tax, right, Mark? So a lot of people aren't realizing that capital gains tax is the tiger by the tail. That's somewhere between 30 and 50% of the gain, right, on the sale of primary homes, businesses, real estate, depending on what state you're in and the depreciation recapture. But the other one is estate tax. So we had a client that had $25 million in their estate. All of it's inside of their estate, and they're selling a $5 million asset in Colorado, a multifamily property, and they use the Deferred Sales Trust primarily for the estate tax savings because upon the exit, that's going to eliminate 40% of the death tax, right? And so people need to be aware of these things without buying life insurance, without giving it all away to charity, and without having to do any gifting. In one day, one transaction, it's outside the taxable estate. So when the kids inherit it, it's going to be eliminating that 40% death tax. So really it's just talking about it, Mark, and helping people understand what the problem is. And then like in a Rubik's Cube, we're going to try to solve that with the tax team, which is our business partners, right? And with the financial advisors, which we work with across the nation.
So you're telling me and the listeners here that there's a silo that you can put things in that removes the taxable component of these appreciated investments. And then you talked about diversifying them. You still have some liquidity. You have a lot of different advantages. So why doesn't everybody do this?
Yeah, great question. By the way, you do pay tax as you receive payments back, right? So it's not tax avoidance, although it is tax elimination for the estate tax as we move it outside the taxable estate. But as you receive payments back, you'll pay ordinary income tax on that. If you dip into principal, you pay capital gains tax. So why doesn't everyone know about the Deferred Sales Trust, and why isn't everybody doing it?
Yeah.
Number one, I would say the biggest thing is that people are used to what they've always done, and there's certain people who don't know how to do this, right? And so the most common thing we have is, my CPA's never heard about it. And I'm like, yeah, that's why you're sitting down with me, right? Because if he had heard about it, he told you about it, he'd solve your problem. But you're here with me to solve your problem. Now, there's a CPA tax attorney who created this, okay? And oftentimes, Mark, when they actually come in and sit down with us and sign the NDAs, because we don't give our secrets away, and we're not in the business of training our competition, but when they sign, they actually join us, and we have thousands of partners across the U.S., including CPAs, national law firms, financial advisors, commercial real estate syndicators, operators, crypto experts across the country. We have everybody. Okay, so they're all joining us, but we're not in the business of like a qualified intermediary. There's 5,000, Blockbuster qualified intermediaries that are out there educating everyone every day, and they're banging the drum of 1031. There's one law firm that does this, okay? And they're my business partners, and so that's part of it. The other thing is not only they don't want competition, but they don't also want it to get into someone's hands where they would abuse it. So what happens is it's like an edge of a two-edged coin, right? You want to help people, but if too many people are either not doing it the right way, and we're very conservative on how we follow the guidelines, then it can become abused. And if it becomes abused, the IRS could shut it down. But here's really the key question you want to ask. How many of these have closed? Over how long? What's the track record? What's the IRS said about it? Well, first of all, it's a 26-year track record. Thousands of closes, billions under management. Over a dozen no-change IRS audits. In fact, additional three formal audits. All no-change, successful, perfect audits. So they've gotten to the plate every time, Mark, and hit home run every time. And tens of thousands of tax returns on these trusts, okay? So it's batting 1,000, and it's perfect. Also, there's lifetime audit defense with the tax attorneys who provide it. And so you can either to say, oh, it's too good to be true, I'm going to follow my CPA's advice, and I'm just going to pay a bunch of tax. Or B, I can go with a new team, and something that I haven't heard of before, take a step of faith, and to defer all this tax that's been perfect so far. So hopefully that answers the question, Mark.
Well, it reminds me a lot of, I'm working on a conservation easement. I'm sure you know about those. And those got a bit abused. The syndications got abused, and the IRS kind of came down on syndications because they would blow up the appraisals and things like that. And they kind of abused their privilege, and the IRS didn't like it, right? So they're coming down hard. If you do them right, they're still legal and they're still a great vehicle. But if you abuse anything, the IRS doesn't like it, right? They want their money, and it makes sense. So, I want to harp a little bit more on tax. And by the way, everybody, are you getting this? Like, are you seeing that there is importance in saving money on taxes? Because if you save money on taxes, you defer it, you use it as an advantage, not as a disadvantage. You can have more money working for you as you amass your wealth. It's really important that you play this defense that Brett's talking about here, because offense is important. It's great to make alpha. It's great to make money in the market, but you've also got to play defense and protect that money, because there's lots of people that are going to want to come after it, and the IRS is one of those. So, let's make it a little bit broader if we could, Brett. And then I want to talk a bit about crypto, because that's kind of my pulling on my heartstrings lately. But let's talk about what are some of the questions that everybody should ask about any kind of tax deferral strategy that they're looking to evaluate.
Yeah, so I want to touch a little bit more on the too good to be true part two, and I'm going to deal with the story, right? Because I think the major thing is the roadblock with what we call false beliefs, or it's too good to be true, or the emotional roadblock, because people are in this state of, like, I just talked with two gentlemen from Michigan today, just 20 minutes ago, and they're selling about a $20 million business sale. Yep. And this is their biggest deal, and this is 10, 20 years of work, and they're finding me on YouTube, and the deal's closing in 2 months. And it's like, there's a lot of emotion that's built up and a lot at stake, okay?
And they want to do it right. Yep.
And they want to do it right, and they don't want to get in trouble with the IRS, and they want all these things, and who is this person that I've never met before, and all of these things, right? So besides me just saying it, I want to tell you a story to give you some confidence and some clarity on the deferred sales trust, even if you have no experience with capital gains tax deferral. And it's a guy named David Young, Mark, who used to run with a guy named Bill Gross. And some people may or may not know who that is. But Bill Gross built up with David Young and about 4 other guys, PIMCO, from about $80 billion to $1.2 trillion over a period of time. And these
which
are some
you can live on if you budget right.
Yeah, and these are some world-class financial advisors and due diligence people. This is what they're in the business of doing. Okay, I think Bill Gross is named the Bond King. Anyways, so they do a lot of things, and a lot of people approach them with a lot of stuff, especially tax deferral strategies, right? Because if you can get Bill Gross and David Young to say yes to your thing, it can open up a lot of business for you. So, anyways, these guys all retire from PIPCO, get a big payday. David Young and 4 other guys form a group called Anfield Capital, and they learned about the Deferred Sales Trust for the first time about 4 years ago. And like most people, they're skeptical, but they're open-minded, okay? And they don't do a 2-day or 2-week or 2-month due diligence. They do a 2-year due diligence. And they have their legal team look at it, and they review it. And they fly back and meet with my business partner, who's the tax attorney, and review it. Sit down on a whiteboard, map it all out. They sign the NDAs. They talk to the clients. They do the exhaustive due diligence for 2 years, okay? And this is what they found out after 2 years. Number one, that might be the smartest person we've ever met. That's the tax attorney. He's a brain surgeon. I call him the Bill Gates of tax deferral. He's brilliant, Mark. Okay. Number 2, cool. We're all in. We will become a part of the DST Inner Circle. We will become a wealth advisor or support for financial advisors to help them with anyone who does a deferred sales trust. They typically have big minimums, but they'll do it for all sizes. And what I always say to people is, if it's good enough for David Young and his legal team, this is some of the best wealth advisors, economists in the world, after 2 years of due diligence, signing the NDAs, is it good enough for Mark and Brett and our legal teams and our CPAs that might be skeptical, right? And not to say you don't invite your CPAs in and invite the people to help you, ask the good questions, but realize that the person who's been the general practitioner for you for the last 15 or 20 years to help you get from 1 to 2 million or 2 to 10 million or even 10 to 50 million is not necessarily the same person who's going to help you with the tax exit plan, right? Like the brain surgery that you're about to go under. They've been helping you with the flu shot, and they've been helping you with your tax returns, maybe even some advanced tax planning, perhaps. But this is so specialized that you want to know that there's confidence that other people that are very smart, very sophisticated, and you can see David Young tell his entire story rather than taking my word for it, who's a commercial real estate broker who learned about this in 2009 and has spent time with the tax attorney to become a trustee and all this stuff. Go with that. So that would be the answer to that, Mark. So you want to dive into crypto now, or any questions on that?
Well, no, I just wanted to ask, what should anyone ask about when it comes to tax deferral strategies? Like, what are some of the questions that you get most often that my audience and, our audiences may be asking right now?
Yeah, number one, do you qualify, right? So the minimum deal size is $1 million net proceeds, $1 million gain per transaction, unless you have two assets at $500,000 each that you can combine into one. And the reason is we have to have enough gain and enough tax pain or tax liability in order to justify our fees and the closing costs. It's got to be a great home run ROI. If it at least has those, no matter what state you're in, what asset you're selling, we found it's a 10 out of 10. It's a home run every single time. Obviously, for New York or California, these higher ones, it could be a little bit lower. Now, if you have cryptocurrency, I have clients like we're doing a $2 million crypto exit right now. She has 40 different coins. And she's like, well, but I got 40 different transactions. Well, that's different because the transaction is much more seamless, lower cost. You can consolidate and do that quickly. So we can work with cryptocurrency owners really like nobody else. So that would be who is it for? The other question would be, where do you want to invest? Like, where do you see the funds? Like, if you say, Brett, I want to buy a primary home or buy a boat, well, that's taxable. We can't defer that. But if you say, Brett, I want to start a business or want to buy investment real estate, well, you can remain tax deferred inside of the trust and still do that. So clarify your wealth plan, clarify your estate tax challenge you might have, clarify, where you think the market's at. Is it a good time to do a 1031 and overpay, perhaps, or is it a good time to sit on the sidelines and be conservative with your approach there? So that's the biggest thing, is just asking those tough questions and then mapping it out with us and with your team.
And I would say, and the saying, riches are in the niches, right, everybody? And so, Brett's got a niche. He's got a way of doing it. He's an expert in it. Building your team is so critical to maintaining, preserving, and growing your wealth. And most of the time we don't know what we don't know. Like, I would say 90% of the people didn't know that there's this strategy that you are an expert in, Brett. So, thanks for educating us about that. And now let's talk a little bit more about crypto. So somebody's got some crypto. Now, I assume that you're not taking things offshore to do any of this trust. This is all domestic trusts.
Correct.
And there's also all the questions about capital gains and short-term capital gains and wash sales and things that really haven't been clarified by not only the SEC, but the IRS and the CFTC. So let's talk a little bit about crypto and the amount of wealth that's been amassed and how you can help those people as well.
Yeah, so first of all, there's about $2.5 to $3 trillion, depending on who you talk with, in crypto worldwide. That's a massive amount of wealth. And a lot of our crypto clients that are approaching us, and we'll tell you about some closed deal stories, they're struggling with capital gains tax because it's massive amount of gains. I think Bitcoin has appreciated 192,000% over the last 12 years, something crazy, right? And
best
so our
performing asset in history.
Yeah, and so if you look at one of our clients, she worked for Google, used to. She bought Bitcoin, about $30,000 to $50,000 worth at a very, very early adoption state. And she never sold until she met us. And in fact, that value went to $50 million. She said, I cashed out a little bit and bought a Tesla. That was the one thing she did. And she goes, but I don't want to pay any tax, Brett. And she goes, and more than that, I don't necessarily work for Google anymore, right? And I want to start a business venture with my college roommate. We've always had a dream to educate people, kind of like a Khan Academy online. And very smart, very sophisticated. And so she looked at the Deferred Sales Trust after lots of due diligence as a way to not only defer the capital gains tax, which is about $1.85 million, she's out of California, but also to be entrepreneur with the capital. And so with the IRS and crypto, with the Deferred Sales Trust, it's not offshore. Everything is U.S. tax code, and everything is in U.S. banks, and everything is reported, right? It's showing the IRS, I actually exited $5 million. And my basis was about zero, but here I'm reporting on an installment sale method with my CPA, and I'm reporting that I exited, but I took no gain. I'm in a deferral state, and the trust itself is filing a tax return, and it's stating that it got it for $5 million or bought it for $5 million, but it also sold it for $5 million, and therefore it has no gain. And how we did this, by the way, is through Kraken, if you're wondering. Kraken has been wonderful, like a Coinbase. We set up a Deferred Sales Trust Kraken account. We had her transfer the Bitcoin to the new Deferred Sales Trust Kraken account. Transfers the keyword. She didn't sell it. She transferred it. Then the trust itself gave her a promissory note for that amount, and then it sold it to cash immediately, and then it exited to a U.S. bank. And that's how, with the trust account. So it's all set up properly. So that's the one deal. The second one was for an Ethereum client, mostly Ethereum, some Bitcoin. He and his wife, his name's Peter. He and his wife working like 67 weeks in the tech industry for 20 years. She's an attorney, 2 kids. They want to travel. And they're like, man, we got all this crypto. And so they bought it for about $100,000 and it went to $13.5 million. But this was ups and downs. These are like roller coasters over the years.
Yeah.
And she wanted to sell at like 6. He finally said, okay, but let's figure out a tax deferral strategy before we do that. So they compromised. But by the time they looked, the values dropped back down to like 1, right? So like, they were crushed. And so this was like the whole roller coaster. So fast forward, they found us. They used the Deferred Sales Trust. He's retired from his company, and he wants to start a crypto company with the trust funds. They want to buy a house in Tahoe, like most people do, right on the lake, right? Lake Tahoe, that is, for those who are wondering. And
on the Nevada side.
Yeah, on the Nevada side, smart. Incline Village, right? So they exited $7.5 million of that $13 million. Okay, first of all, it was $5 million, and it was a Saturday. It was actually the first deal that's ever closed in the Deferred Sales Trust cryptocurrency history. And I'm driving, and he's like, Brett, Ethereum just passed the 3,000 mark last night. Are you available? He's so kind. I'm like, yeah, I'm available. Let's do this, right? He's like, are you buy a Starbucks? And it's like the codes, or everything's, it's authenticated and backed up. We did a test run already for $50, so everything's safe and secure. Yeah. But it's like I have the launch codes, right? And I'm like, okay, ready to go. He's like, okay, there's 250,000. Okay, there's 750. Okay, in the next hour, he transferred $5 million. I'm like, we should write a book on this, Peter. This is hilarious. Like, what are 2 guys that are completely didn't know each other that are now connected because the tax man is he's real and he's there and he's ready to take his amount if we don't use these things. But because we follow the system in the process, we've deferred the tax. He's really happy. We're really happy. Everybody wins. By the way, the IRS wins too, Mark, because guess what? He was able to exit at a high price. The money has been poured into, for him, it's been stocks, bonds, mutual funds, conservative investments there. And that's going to spur economic growth, right? And that people are wondering, like, are we doing something that the IRS doesn't want us to do? No, these are the codes that they put in place for us to follow. Right. And they're incentivizing him to exit high, to diversify, and to spur economic growth. Hopefully that increases jobs, right, and creates some real income for the tax income for the IRS too.
Yeah. Wow. And it's just amazing that there's so many angles on Bitcoin, and it's those people that are hanging in there. And Bitcoin's been flat for 5 or 6 months now. Ever since it kind of hit its high at 69,000, it's down under 40,000 today. But it's just one of those things that if you hang in there, like I say, every Bitcoin that you grab is $1 million, right? Even though it only costs you $40,000 today, it's $1 million. So if you have 10 million Bitcoins, you're going to be worth 10 million in today's dollars. So, amass them, but don't sell them, borrow against them. Do things like Brett's talking about, use trusts, do things right. We don't want to do things illegally and then have to spend time in jail because we didn't do things right. Let's do them right. Let's pay our taxes if we have to, but let's not be stupid. Let's have. By the way,
can I throw another thing in here for you for the cryptocurrency enthusiasts here? Okay, and we think this is the number one opportunity with the Deferred Sales Trust. What I'm about to say right here. Okay. And so during this 50, because the client who had 50 million, the same thing, Mark. She's like, I never sold. The only reason I'm even exiting is because I have a business venture in mind to go to. I don't want to put in the stock market, although she did put a little bit in the stock market as part of the requirement to do some dollar cost averaging and to have some liquidity for the trust.
Okay.
So, but she says, Brett, I don't want to sell the 50 million. I believe in the long-term future of Bitcoin, just like you're saying, this is my primary way to build my wealth for my family, everything else. And I said, okay, that's cool. I like that. I go, I called her because we exited at 54,000 a coin. So I called her at 58,000 a coin. I'm like, hey, what do you think? She's like, nope. I'm like, and it came to 62. I'm like, hey, what do you think? And she's like, nope, no problem. And it hit 68,000. I'm like, hey, it's pretty high right now. What do you think? Like your 50 that we exited 5 of was 45 is probably now like 62 or 65, right? And I said, did you know that you can exit this, put it into the trust, sit in the bank, and if and when crypto drops, you can partner with the trust and buy it back at a discount.
Oh, wow. Wow.
And she's like, Brett, I'm not ready for this yet. I hear what you're saying. She goes, but I'm still getting to know you guys because it all happened, between 54,000 and 68,000. I think it was within like 60 or 90 days. So she's still, and I go, I get it. I'm not going to push you. I just want to know what's possible. Okay. Yeah, so sure enough, and this is Monday morning quarterback totally, right? It drops to 35,000 a coin, right? Monday morning quarterback, she would have exited $69,000, 60 something million. And then she would have sat in the bank. It would have dropped to 35.
Yep.
Tax deferred. This is the key, right? Everybody, tax deferred. Because she could partner with the trust. She could buy back in and write it all the way back up. Like it's incredible here to think about that. But
yep.
that's the goal here, to sell high, never feel trapped by capital gains tax ever again, for the reason why you don't exit. Because most cryptocurrency experts and investors, they typically know when it's a good time to sell and a good time to buy for the most part. But a lot of them are gun shy because of the capital gains tax. So when we relieve that issue and give them the flexibility to go back into real estate, we have another NFT owner we're working with. He has $200 million worth of an NFT. And he's in his 30s, and he wants to buy investment real estate. He thinks it's going to go to 300 to 400, 500 million. And so he's been waiting a little bit. But the point is, once he exits, he can buy real estate, but he can also go back into and diversify. And so these are all the things that are possible with the Deferred Sales Trust, but you just have to get with us to understand it.
Yeah, absolutely. So everybody, you don't know what you don't know until you meet somebody that knows, like Brett. So Brett, you have a website, I think it's called capitalgainstaxsolutions.com. And you also have a book coming out. I think it's by the same name, right? There it is. Wow. Right on cue. So tell us a little bit about that and how my audience can get a hold of it and how they can find out a bit more about you.
Yeah, thank you so much. So it's called Building a Tax-Deferred Exit Strategy, and it's the proven playbook for unlocking your ideal wealth plan when selling assets of any kind for yourself or your clients. Mark, they always say to get into the room with smarter people. So this book is not just me. It's with a lot of other smarter people. In fact, the story I told you about David Young, who ran with Bill Gross from PIMCO, he's got a chapter in the book, and the chapter is called Overcoming False Beliefs of the Deferred Sales Trust. He tells his entire story of start to finish with his due diligence and how he get confidence and clarity on why he's putting his name on it, as well as some people like Kevin Harrington from Shark Tank, right, who came on my show and says, Brett, you're telling me that this can work for public or private stock? He goes, I bought some stock at 26 cents a share and it's worth 20 something dollars. And then, yes, it works for public stock. You can use it for public stock. We have some other people like Kevin Bupp, who does mobile home park investing. People like Joe Fairless with Best Ever Conference, who does a couple $1 billion of multifamily investing. And so it's all woven in here, and the Deferred Sales Trust is woven in about what's actually possible. And so, yeah, you can look for that in the next 30 days or so. It's gonna be on Amazon, and you can go to capitalgainstaxsolutions.com to learn more as well. Also, join our free mastermind every Friday. It's a Deferred Sales Trust Masterclass. Anyone's welcome. You can ask questions live on your deal. You can hear from other clients, other CPAs, financial advisors that are learning about this and or know about it. And everyone can join and talk on that as well. Every Friday at 10 a.m. Pacific Standard Time, 1 p.m. Eastern. You go to capitalgainstaxsolutions.com for that.
That's awesome. I believe so much in the power of masterminds, and I also believe in what you're talking about. I think we need to get so much more educated. Quick question for me, though, and a lot of my listeners are stock market people, including me, as you know. And, we create a lot of short-term capital gains, but a lot of people that I have, it's not all their money. A lot of people have some long-term capital gains. This is not just appropriate for real estate people. You can use it in the stock market too, correct?
You absolutely can. In fact, some original Netflix team members had highly appreciated public stock. They were able to exit using the Deferred Sales Trust. So 100% works. It's typically a single stock, right? If it was like a mutual fund, like it wouldn't be good. It's got to be like a single, highly appreciated single stock that we can set this trust up for on the exit. It could be multiple stocks too that you can go into one trust and have multiple promissory notes. But each one is typically going to be about $1 million net proceeds, $1 million gain. It's got to be big enough. As long as it's big enough, then yes, we can do that.
Okay, great. All right. So let's get away from the shop talk a bit. And let me just ask you this question. If you could have coffee or tea with any human, past or present, who would it be and why?
Okay, so I'm going to give you. I'm a Christian, so it would be Jesus. You got to go with Jesus. Like, there's
It's a good
no
answer.
doubt,
I would
no
probably say the
doubt.
same thing. Yeah.
Yeah. So and then if it was like, business and or political, it would probably be like either like an Abraham Lincoln, or like a Winston Churchill. I think those would be my two. It'd be a
All right.
toss up.
So what would you ask Jesus, right? You're sitting down, you're having a
Man.
Starbucks with him. What would you say?
I mean, how do we help more people, right? Either hear the gospel, believe the gospel, or know that Christianity is the way to heaven. Like, just something along the lines of, like, it's such a big topic and really challenging for people to overcome. Like, why, and I don't know. I think that's probably would be the question,
That's cool.
for my beliefs. And then I think the Abraham Lincoln or the Winston Churchill would just be, I mean, the fortitude to fight through, adversity and challenge and so much that they overcame, and something along those lines. What was your
Well, it sounds like you like the underdog. All three of those guys were salmon swimming upstream, right? Always fighting the institutions, always fighting the entrenched interests. So it sounds like I figured out who you are just by asking you the question and hearing your answer. So I mean, for me, it's people like Einstein, it's people like Socrates who ask the right questions to get people thinking better and getting more debate. And Jesus is certainly somebody in there as well. So what's the link to your free resource again? And then listeners can find you online, because you have a podcast as well. I'd like you to just tell everybody where they can find that.
Yeah, you go to capitalgainstaxsolutions.com. You can search that on YouTube. You can search it on LinkedIn, Facebook. And then we also have a free ebook, 9 Steps to Selling Your Business, Real Estate, or Cryptocurrency Smarter using the Deferred Sales Trust. So you get the free ebook. Go to capitalgainstaxsolutions.com.
Beautiful. Listen, Brett, I really appreciate your talk today. I really enjoyed it. I think our listeners enjoyed it. I always end on this: never give up your power in your health, your wealth, or your time. You're certainly an expert in what you do. I want to thank you for offering that expertise to our audience. And I want you to have a fantastic week. Great to talk with you. Thanks.
Thanks, Mark. My pleasure.
Hey, it's Mark Yegge, and I want to tell you about our cash flow machine trading program that's designed to teach you how to make safe, reliable income. Now, we shoot for about 2 to 4% a month of income and growth in your portfolio. We have courses that teach you how to do this for yourself or inside a mastermind community. And the best part is that it takes just 20 minutes a week to implement. Now, while 2 to 4% a month doesn't sound like much, I show you exactly how we took my IRA account from $111,000 to over $500,000 in just 19 months without huge risk. Now, I'm not telling you this to brag, only so that you can do it too. If you want to get involved in this program, just click on the link below for the cash flow machine and you can start right away. You've been listening to the Wealth Architect Podcast with Mark Yegge. Follow us on iTunes, Spotify, or wherever you get your podcasts. Like and subscribe on YouTube. Share and tell your friends. See you soon.